So
Corey, what's your YouTube?
yeah, I'll show you.
Corey, what's your YouTube?
Yeah, I'll drop it. I'll drop it.
Oh no, I think that's the echo. That was me again.
Sorry. Okay. So Brother Brian, what up, bro? What up, man? Did I say it right? Hermano de otra madre.
Hermano de otra madre. Happy birthday, my bro.
Appreciate that. So I meant to drop this from last week, and a lot of this stuff still apply. So that's kind of what I'm gonna go over, because we kind of stuck. And what I think and what I believe is we set a range already. I'm gonna start with SPX though, because I want to kind of go over that real quick, because it'll apply to all of them. You just gotta find out where these levels are, right? So SPX has this, from this drop to this low to this high, right? There's some key levels in here, some smart money levels in here, right? That we all need to focus on. And this area right here on SPX is where our sell side is. Right now, we have a buy side area right here. That's where our imbalance is, right? So I'm gonna just label this a little bit. This is where our supply, this is where our demand is, right? So we kind of trapped in between, and this is from a weekly perspective, right? We kind of trapped in between this imbalance on the weekly, and now this one that was made just recently from this move up. But you can see we had a change of direction here. So we technically are still bearish, because overall, we've only came back about 12% here, and we sitting at about 10% from this move that was 20%. So we kind of still bearish, right? But once we start going to the lower time frames, we can see that the range was set from this low. And I gave out a setup to some of the guys on my team from last week, and that kind of still applies for today and going into next week. So I will share that chart with everybody on here. Yeah, I had a sale that was open that it hit TP like crazy, bro. I didn't even get a chance to move my stop. But so this is from our weekly area of supply. This is where our weekly area demand is. And we can see, we can even go down in here inside of this little area from a daily perspective and see there's probably going to be a little buying here as well, but we don't have to deal with that yet. So if you wanted to note that, you could, but we just want to focus on this little range that we in right now. So I'm gonna clear all this off real quick, but I just wanted you to see, like, from a longer term perspective, that's what I'm looking at. So right now, if we looking at this chart that I just sent you guys, has pretty much everything on it, right? And from this area, I was looking for us to kind of come down here and hold this area, because this is a continuation block, a continuation order block. And if you notice where it is on the daily fib levels, it's right at what would be considered a kill zone. So this one is kind of important. That's why we kind of held right here the last couple of days of the week. But then there's a little imbalance here on the 4 hour and on the daily that has held us down in that little area. You can see it like right around in here and in here. So if we zoom in the 4 hour, we can kind of see, oops, that daily order block, which is this down series of candles right here, has kind of held us in that range, right? And here, and then this little imbalance here and here has kind of held us down in this area. So what I'm gonna be looking for, and you can see it over here, is I know that it's gonna want to come and feel that. So if we come into that area, the first trade I'm gonna be looking for is for us to take this leg down right here, this leg from here. So if we can continue, so we've already had this push up and this push down, and this is the leg I'm looking for us to make right here. And you can see it, right? We had this push up, this push down, and we made most of that leg back up, but we probably will get a push up into this area right here. And if we stay bullish. So now what I like to do is, once I kind of got an idea of where my imbalance, where my highs are, which are here, 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 these are my lows. They've already decided they want to hold these lows. Before I wanted to take and sell, I want to see where would they come and grab liquidity from. And as it stands now, this is the most recent imbalance right here that has not been touched, right? Then I got clean highs over here, right? In this area, right? I got clean lows right here, but these clean lows are at a bullish point of interest and it's held already. So we can kind of say that these lows are established. And before they would want to take these lows out, they would want to run this liquidity on the upside, right? They know they got an imbalance. They know they got equal highs, and they could even come after this high before they would have dropped it, right? So what I like to do is kind of, now I know like where things are mapped out at this point. I know where all the money is, right? There's even this little short-term high right here too. I know where all the money is now. Right here. We got big money. The bigger money, short-term, is down here. But they don't want to take it there yet. And we know that because we have big buys here, and one last big buy over here. And you know that by watching these wick candles, right? And we can see like, okay, they would want to probably run this high, fill this imbalance, and at worst case, run this high before they drop, right? They're not just leaving that there for no reason, right? And those are signs that are typically left behind to see where they're going to want to try to go. So you can kind of map out what to expect already. When I have these little areas right here, especially like this imbalance, I go ahead and I annotate what those levels are. So I know, all right, those are my 3 levels right here. I focus on the price coming to at least the middle. So I'll be looking at 45.57 really, really hard. 45.57 really, really hard. And I'm gonna go ahead and make an alert right there. $57.84. I'll label this. This is a 4-hour imbalance. So for me, I'm gonna be looking hard at this and at this 45.49 number too. But for me, really, really, that middle number, 49.85.3. So and knowing this as well, if you do try to buy in this, you can use this as a target too. Maybe you get in at the break and you just say, you know, you want to take it anyway, you know, it's coming to want to try to fill these imbalances. So if you take the buy, which sometimes I'll do, sometimes I won't, because I want to get into the overall trend, then I'll go ahead and take it. But a lot of times I just let this go to get set up for this bigger drop. And then you also have this order block right here, this last up candle. That'll also be a target from the 4-hour. I typically like to get my order blocks from higher time frames. I'll take some lower time frame order blocks, but usually I won't go lower than the 1 hour. But that's one right here. I'm not labeling everything, but the areas are with it. And you'll notice everything I'm doing right now, you can see pretty much the same. You can see confluence from the rest of the indices as well, right? So this is our daily. You can see on the weekly on NAS, this same imbalance is right here. This same high is right here, same everything. Then on the buy side, there's your imbalance, equal highs here. And if we go to the daily, there's that daily order block right here. It's passed through it. That's kind of giving me on NAS's perspective that maybe it's holding this and this combined, but we are still looking at the same kind of move. So let me send you that one too. Until we make some kind of significant move, these charts that I'm sending y'all are pretty much my way of handling the indices until we get something that changes my thought. And I don't see it too much changing from this. And if we do happen to buy it up, we still know we have this area of structure right here that is going to be hard for us to compete with, because we would need some kind of market shift or some type of shift in the market to change this from being a bearish market. Like, we don't have anything in the short term that says, hey, it's time to make a new all-time high. Nothing, right? And on the no news, only thing we can think of is something like, you know, the war ending between Ukraine and Russia, but it's nothing, right? That's probably the only thing. So just like SPX, this area right here, only that's our supply, that's our demand. For the most part, our most recent, because we got this imbalance on the weekly, imbalance over here. Then diving into the daily, we got this order block and this one, little small one, kind of holding. We'll probably see it better on the lower time frame, like the 4-hour, but that's where we're holding right now. And then we have this imbalance that's in between here. Right here. And we already reacted to it once, right? We made the imbalance on these two candles and we reacted to it, set a high, a wick high right here on the daily and rejected from it. But what happens here is we didn't take out this order block completely, right? So we still have a chance to bounce up and into this area, or into this order block right here. So that's what I'm hoping for, because I want to be able to get a higher entry for the sell. And if we go to the 4-hour, we can kind of see it, right, a little more. where we got these equal high. This is our imbalance on the daily. But we got these equal highs right here. That's where our money is sitting, that we want to see them take out. These equal high lows right here. That's our short term right here. So then we have this imbalance that got left behind here. Right? These are our key areas. We had this significant low taken out, so that kind of gives me another confirmation that we have a change of character in the market where we are downside, but this order block held over here. And because that order block held, you have to assume that they're going to want to take these highs out and run us back into this area in balance. And another thing is, if we look at this short-term trend line, right, we can kind of take high to low and just kind of give you a projection of where we could get a high from. If we look at geometry, right, there's usually going to be like a little area where we can see, all right, if we take from this move right here, and if we make about a 70% 618 return to this, our new lower high would probably be somewhere around here. And that puts us inside of this imbalance area. If we take the fibs and let's use this one. So, right, that pretty much, if it does push back up, even if it pushes back up to about 70, 618 or 786, that pushes us into this imbalance area right here. Or even if it comes to the 50, that puts us, you know, roughly around somewhere near us touching this this trend line. So it would look kind of like if we held here, came back to here, that lines up with us making another higher low off of this little short-term trend, right? Even if we just slightly wicked up anyway. So that still lines up with our hypothesis about what we could see from the market, right? Just like on SPX, let me see, I drew this trend line over here, this one. You can see, I don't know if you can see because this kind of might be a little hard to see. You can kind of see this has already happened over here. This trend line right here was one I drew a couple weeks ago, but my logic was that we would come to it and reject from here, which lines us up into this imbalance that we had right here. And we spot on. We came up to it, held it, rejected. That put us in the middle of this daily gap right here. Our levels we would have focused on would have been 45, 60, 71, and 82. And it pushed from this low up to 82, and then we rejected in line with us making a higher low along with this trend line right here. Right from these highs that we made once we hit the middle of this one right here. So so for you guys who not familiar, because I know I'm seeing some new names that's not probably haven't been on my calls before, and I've been taking a little time away, but I trade smart money. I trade smart money concepts. I trade order blocks. I trade fair value gaps. And that's why you see some stuff you might not have seen before on my charts. But, you know, those are the things that I'm looking for. And if we look at this, you know, if some of the things don't make sense, don't worry. If you stay on the calls or get on these Sunday calls, I will definitely explain everything. And, you know, make sure you understand. So, you know, this will be more so for people who kind of already understand what I'm looking for. But on that point, just following along what I was saying before, this same trend line is the one that I'm looking at, right? Because we haven't had a touch to it yet, right? We haven't had a return to it. So us having a return to this would put us somewhere around this 45.25 area and back into this area right here that I already marked off on this chart. So this is what I'll be looking for overall, just, you know. And let me go over US 30. Same look. Starting at the weekly, we got our imbalance. I'm not going to draw it this time, but our imbalance is from here to here. This has already been cleaned out. We came back up to it again, right around here, rejected the lows on the weekly, right? We left an imbalance here on on the buy side right here. We left an order block here. These three candles right here, you can see clean reaction to this order block right here on the daily, where we went from this high, this low, this high made at this order block, right? So you can see we responding pretty good to this, right? Then this is our little small area structure. Here's our order block to the upside. It's a bullish order block. We pierced it. We pierced the low, but we held it so far. So now we need to look at what got left behind, right? What got left behind is this imbalance right here, which was partially filled right here on this wick. Here's the imbalance on the daily from here to here. And we partially filled that, right? But we only got wicks in this area. Usually when you are looking to see whether or not one has been filled, you're going to see bodies in this area, closed bodies in this area, or you'll see full bodies traded through the whole thing. On the lower time frame, we might see that, but if I want to see this filled, I want to see it filled, you know, where it's actually coming through it and going through it, if to say whether or not it's done using it to the upside or to the downside. So this is an example right here. This area right here on the weekly is not filled, even though on the daily we seeing this. But this little imbalance right here on the daily, this has been filled because we got full body candles through it at least 2 times, right? But that's another subject, right? So we can already see, right? We got this imbalance. We got these lows set right here. And we've already tried to pierce into it as it stands on US 30. It's lining up on US 30, on SPX, and on NAS that we may need to come back up to an imbalance to fill it first. If we draw our trend line, similar situation. This the higher trend right here. We pretty much lining up with it over here. Oops. This is our higher trend. We pretty much line up with this one. Lower trend here, lining up, and then short term lining up right here. Pretty much lining up right now for us to maybe at least push up. US 30 look a little different because it's showing that it's done probably and can go ahead and go lower, but I still want to see us pierce into this and try to fill this one more time. Now let's go to the 4-hour. Yeah, I like this candle. Push it up into this and then reject it. like that. We already took this. We still got pretty much equal lows right here. That's money right there. We got this high. That's money right there. And now we got this recent high right here. That's a little money right there. So then we also got this little low. That's money in the opposite direction. So we got our short-term money right here and here. Watch what gets taken out first. If they take this out first, they're going to push it up to drop us. If they take this out first, then they may be pushing us down to drop us further from here. Right? If they hold this low right here, they're going to keep us in this range for a while. And so that's pretty much the same sentiment for each one of the indices. Everything that you can look at right now is pretty much setting a small range from this low to this high, and then an even shorter range from this high to this low, and we trading in that. You see, we got short-term money here and here that's holding at the moment. And like I said, we can buy up to this area, but we need to be careful from that point because we got order block, we got an imbalance, and this is also sitting right in the middle of a kill zone. Same thing over here. Imbalance, short-term money here and here, and we got a kill zone sitting right above it. So if we do trade up, we already know we need to start looking for areas to consider that this may be slowing down, which is this area. So I'm gonna go ahead and put alerts right here. And you know, you guys that are quarter theory numbers, quarter theory people, this lines up with 15,000 flat, you know? So you kind of already can see where this is going, right? Put another one right here. Then on US 30. US 30 is the cleanest of all three because it's responding more immediately to the levels that price. And that one, this one will probably push up a little further than the rest because I'm seeing that this might want to push up into this range right here, into this order block here, which will put us at another quarter number as well. So if we look at this 35,000 flat, 35.76, that's pretty much 35,000 flat to me. I'm around that down, right? So we'll put it right here. And I'm gonna be looking at it coming up into this area, which is again, imbalance. Knocking that price, coming up, trading that price, giving us a wick up and around in this area, and then dropping from there. I'm gonna actually put one right here too. And just once you see price of this area, you know, set your alerts and look for your wick rejections. And once you get your wick rejections on a lower time frame, you can take that as your confirmation to go ahead and enter the trade. So let me drop these three. This is US 30. Oops. This is NAS 100. This is SPX. And I'm gonna go ahead and open it up for some questions. And yeah. You want to turn on your mics, you want to ask in the chat, just let them fly. If we got anything. Cool, nobody? Oops.
Well, I'm good. I apologize if it's hard to hear me. I'm in the car. But so with your imbalances, only thing you're doing, you're just looking for a big candle and seeing the imbalance part. You're considering the part that hasn't been wicked into.
Yep, I'll show you. I'll show you. So if we look at we can spot a couple right here on SPX, right? This down candle right here, the imbalance that you're looking for a low candle. It could be bullish or bearish. The wick, this wick prior to this bullish and bearish engulfing candle. And then you're going to take the first wick after the bearish engulfing candle has been made, and you're going to measure this low to this high. That's going to be your imbalance, right? And I'll clear this real quick. That's going to be your imbalance. So let me zoom in a little bit. You're going to take this low, which is here. You're going to take this high right here prior. This is the low prior to the bullish engulfing, bearish engulfing. This is the low after the bearish engulfing. I mean, this is a high after the bearish engulfing. I don't know why my mouth is not working today. And then you're going to take, I have a certain fib already created, a template fib, right? So now I know what levels I need to focus on inside of this imbalance, right? So you can see after immediately, right? Once we made this imbalance, it came back into it and made a new low. You could have took that trade, but it's a little risky, right? Because you don't know exactly when the imbalance is going to be made, but typically the first one afterwards, right? That's one trade. Once it came to 50, right? If we don't get any rejection right here, you can do one or two things, right? You can take the trade once we see price back inside of it to reach the middle or the high. If you want to take that buy, if you don't and you want to wait for the sell, you wait for it to show you confirmation at the middle or the high that is ready to sell. You can also take the buy from the middle of this to the high if the range is really big, right? And if we go, once we go to the lower time frames, you'll see what I'm saying. So this 4 hour, right? If we go to the 1 hour, you can see that once price traded back inside of this, you had some consolidation here, a wick that touched exactly at 45.55, 45.5103, which was right here. And it traded up at least to the middle, right? This order block to the upside, it happened at 45.6511, right? No coincidence, right? The low on the candle is 45.64. We pierced this middle slightly and then ran up to the high, right? We did trade out of this, right? But for the most part, we never really got a move outside too hard outside of the high of the imbalance, right? And then this is where you could have looked to take your sales from, which I did in this area right here. And I think it's even funny because I think Brian might have got one as well from, but he uses different concepts to see some of the same things I see. So that's cool too, you know. But we got high here. We got our first area right here, 49.85. We got 45.90, and we got 45.93. But we really spent most of our time, once we got to the high of this imbalance, we spent most of our time sitting right around 45.79, right? Most of these candles right here are sitting around that area. We had this candle to push up, this candle, and this candle, and then these two. But the majority of the price is right around 45.85. That's not a coincidence. It's because we had the high of this imbalance. And since we're still bearish, we're still ready to go lower, right? Then over here, if you go to the 4 hour, you can see there was imbalance left behind here. So that's helping me get my projections for what could be coming, right? Here's the low. Here's the high. Right? I also got an order block right here. So in the case that it trades outside of the imbalance, up until this point, I'm still going to be bearish, right? I'm still going to look bearish because I got a lot of things telling me to be bearish at this point, right? And until something proves otherwise, I'm going to be looking at these three levels: 45.66, 45.57, 45.49. When it comes in here, I'm looking at those three levels. Do we get a reaction off the low? Do we get a reaction off the middle? Do we get a reaction off the high? If we don't, then I'll take the loss. You know, I'll take the loss. And at worst case, do we get a reaction off of this order block? I'll take the loss. But if not, I know that I'll still be good now to take the trade. So if you see these, you can see them on, you know, lower time frames. You see them all the time, right? Here's an imbalance right here that was filled on the upside. We take our fibs right here. Look at where this is. It's not a coincidence. 44.74. If we had been looking for an entry, we would have already been able to see. Here's a low. I mean, here's a high. That's the low of the imbalance. There's a low. That's the high of the imbalance. We would have drew this out. We would have had an entry here to take it up, to try to take these highs out, which it didn't really take them out, but it did push up to the high. That could have been your first target to take some profit right here, right? Then once it came back here, this wasn't as great because it only pierced the high, but 44.83.78, the low on this candle is 44.81. You would have only had like a 10, 20 pip drawdown, and you would have been at least been able to move your stop to profit, because this is about 50 pips of profit, right? Same thing over here. If you had been looking for a sell, right? These little candles right here. Also a little small order block on the 1 hour, right? There's your low of the imbalance. There's your high of the imbalance. Price came to it right here. We immediately wicked. Price came to the middle, came to the high, we dropped. We went from imbalance to imbalance. Came back again, came down to this imbalance, wicked right here, pushed back up, held the middle. Then it dropped again, right? It's now, this is where your true supply and demand is right here. Your true area of resistance is right here. because it's made it on the chart, right? Set the highs. Highs are inside of an imbalance. Set a temporary low. Low is inside of a balance. Here's your demand. Here's your supply. You got equal lows here. So now you're seeing everything mapped out. Even this area right here, which we didn't talk about. Even this area right here, if we look at that order block that I mentioned earlier on the daily, which is a daily order block, this is the high, right? We can take our fib. Again, I got a special fib for this. Right? We could take a similar approach, right? So we know the high of our order block is 45.18. Look at where this wick is. It went down to 45.06, but on a daily order block, that's okay. You could have took this trade right here from this wick right here to there. Then here's the middle, 44.84, right? Most of the bodies of these candles are sitting around 44.84, right? That's not a coincidence because we're in the middle of this order block. And then the low, 44.57. The low on this candle is 44.49, 44.50. We didn't really get too far outside of 44.57 because we're still at the low of the order block. So if you were looking for some trades right here, which I know people who took buys down here based off of this order block right here, they were able to take this little quick move up right here. But here's the thing, right? We focus on the three levels, right? Inside of this order block, high, middle, and low, right? We still in the middle, near the middle. Price is sitting right around the middle. And if we still have some momentum to the upside, we should come out of this order block into a new bearish point of interest, which is our imbalance on the 4-hour or this order block on the daily, you can see, right? So if we can come out of here, we have to go from one bullish point of interest to a bearish point of interest, and vice versa. It's always going to be like that. We got to go from, you got to think of your market always like this. This is from supply and demand. And you got to think of it, right? This is when it's in premium. This is when it's in discount. And you always going to be in one of these states, right? Or you're going to be moving from one of these states to another, right? Every single point, right? So from here, if we look at the bigger picture, we went from supply to demand, right? We left supply right here on the daily. We had a imbalance over here. So once we set the low, we went from low to supply. And now we found short-term demand right here. We went from higher time frame supply to short-term demand right here. So if we want to get out of this, we either going to go to from demand to demand, which is, this would be the next area of demand, or we're going to go from demand to supply on short-term supply, which is where we got our alerts, right? It's always where the market is going. Always doing that. And the imbalance are just clues to tell us like, all right, this is an area that has not been filled. This is an area that only buy side has been delivered or only sell side has been delivered. And in order for us to balance the market out, that buy side has to be mitigated or closed, or the sell side has to be mitigated or closed, either way, because they are placing these orders at a rapid rate and they got to close out so they can take profit right there. You know, always got to do that. So that was a good question. That was a great question. Okay.
Thank you. I just wish I wasn't in the car wash so I could pay more attention, but I think I got the gist of it.
I recorded this.
Oh, yeah. Channel. I'll make sure I watch it.
Yeah, I recorded. Anybody else?
Yeah. How did you set that fib up?
How did I set the field?
Yeah.
Who was that? Derek?
Derek. Yeah.
Okay. Good question. It's easy. So inside of the fibs, right, I just went ahead and set the levels that I wanted to have on this, set the colors, you know, set the direction I want the price, and then you can just come right here and save it as a template.
Okay, cool.
Yeah, that's all it is. So like, let's say I wanted to make a new one. I'm gonna change this to orange or something. No, cancel that. I'm gonna change the 50 to orange, so I can just highlight that. And then now that I made the change I want, go ahead and come to template, save as. This will be border block field 50 orange. Save it. Now, whenever I draw my fibs out, if I don't have the fib, this will be the one that I just made. If I want to use another one, I got the templates already here and I can just say, just drop it. Now I want to use this one because it's the one I want to get my levels from. So I'm gonna use this one for this particular instance. And then this one is for another purpose. This field works for me for, I'm looking for entries. This field works for me if I'm looking for order blocks with orange 50%. And then another field I have is the defaults, right? That's got all the levels on there, right? I might use this if I want to just see like projections. Then I might use this one when I want to measure imbalance, but when I'm looking at imbalance, I don't want to see the price on that side. I want to see it on this side so I can see future areas, right? So that's why I keep a whole bunch of different fields because they got different purposes. Weird to some, but I understand it.
Facts. That makes sense. Appreciate it.
Okay. So I'll put it. Oh, let me do one last thing. Let me go over dollar right quick. So dollar, going over dollar will help you understand how to trade GU and EU, UCAD, all that good stuff, right? And a couple people were trying to take some buys on EU, and I was reaching out to them, and I was just like kind of like watch the daily, because once we took this high out, we had to come to 100. We had to. So before you tried to buy EU, you needed to wait for dollar to react to 100 first, right? And let me see. It finally reacted to it because we finally got a rejection, right? We finally got some kind of movement on EU right here to the upside and had a rejection at the low right here. So it was the right idea, but it was just a little early, right? Because we hadn't got, because we saw that dollar hadn't responded to those highs yet, right? Same thing on GU. Same time dollar making that rejection, GU is taking out liquidity over here. It's not a coincidence because this move opposite. So as highs are made on dollar, you should see lows made on GU. As highs are made on dollar, you should see lows made on EU, right? Always going to be the case, right? Unless something weird, unless it's some kind of manual intervention, right? There's the high, there's the low. There's the high, there's the low, right? A trade that I took that you probably will still be able to get, but now that dollars made this high, now that it made this high and it's pretty much came up to a whole level and pierced this liquidity here, I want to see it trade back into some of these imbalances that it left and actually take out this weekly level right here. This is a level that I got marked off on the weekly. And it's an imbalance, or it's an order block. I can't remember which one I should have labeled. Yeah, it's right here. Right here. I think we're going to come into pierce this level right here before we actually drop. But I could be wrong. I'm just kind of looking at that as a target from a higher time frame, right? But I want to see us push down back into this range first and then push up and get it. So that's kind of a quick rundown of dollar, because we got this huge engulfing candle for that week. And if we can't get back below this body, I'm going to still say we're bullish, because if we push up any further, we would have to rebalance and deliver and close below this to get lower than this. And the way that this week closed out so bullish, I don't see us trading back below this candle yet to go back to the monthly. So we probably are going to hit this before we see any downside movement. So these lows may hold on GU and EU, but at the same time, we got a couple of levels that we would have to get through in order for this to actually be ready to be uptrend on GU and EU. So that's just a quick rundown. Yeah, gold. That's right, Brian. Gold, but gold been doing some janky. Gold has been janky, man. Oh, I haven't been able to touch gold, man. It's just been ranging. It's just, this is trash.
Hey, actually,
I haven't touched gold since it's been stuck in this. So I just been watching it though. Usura, yeah. Basura, yeah. Silver too. Silver been trash too.
Are you going to Calgary? Are you going to church at CCFI?
I'm late already.
No, you're not. You're early. Nope.
They've been trash too. So I haven't been able to really trade those two. I could have, but I just didn't see no point. But yeah, man. That's pretty much it.
Your Papa Crowler.
I don't have anything else. So if
He
you
heard
guys
the-
got I'm gonna start doing this call on Sunday. So and it's really a Q&A and then like just what I'm looking for the week. The only thing I forgot to do is just go over this news stuff. Let's see what we got. We don't really have nothing on Monday. Nothing on Monday. Tuesday, CPI. That could probably set us up to push us. So we'll probably be kind of chill on Monday. That would line up with us pushing up kind of gradually to that area imbalance that I was talking about, because opening up on Sunday, going into Monday and not a lot of news, we'll usually respond to the technical side first. Then putting us around Tuesday, putting us around that area. Yeah, we got CPI and we got 10-year bonds and we got FOMC members speaking. So yeah, that will probably be a day we need to pay attention to, these right here. And then GDP, CPI on Wednesday, PPI, need to pay attention to that. 30-year bond, definitely need to pay attention to that. And just as a, when the bonds go up, indices go down. Note to self if you don't know that. When the bonds go up, 10-year, 30-year, 2-year, 3 months, when those go up, indices go down. So this Wednesday should give us a nice trade. Tuesday should give us a nice trade. Monday should be technical. So whatever you see on the charts, you should be able to take that. But we should have a big move on Tuesday and Wednesday. And then we got core retail sale, unemployment claims. That'll definitely be some big news. FOMC Minster, which region does he cover? Cleveland. Okay, he might do a little bit. Consumer sentiment, that'll probably be good. So Tuesday, Wednesday, and Thursday gonna be busy. Friday, not a lot. Not a lot. Friday might just clean up some of what happened throughout the week. So we got a lot of news this week. But it looks like Tuesday, Wednesday, and Thursday, and Wednesday and Thursday being the biggest news days. So definitely have to pay attention to those and watch where we are. Cool. All right, y'all. Let me give you this recording and please don't share it out. It's just for you guys. I already don't. Stop it. And then Right. Cool. Just the YouTube right here. And save this. And you know, throughout the week, if you know, check on it, see what you see. And it should be lining up with what's going on. But I'll catch you guys in the chat. And good trading. Hope everybody make a lot of money today and the rest of the week.